Hello everyone, a warm welcome to my YouTube channel again. And as some of you may be knowing that I've not been in the best of my health recently, and we have seen lesser number of these live sessions which I was doing happen. So again and again, I've been getting messages regarding what happened on Friday. What happened? How was the market showing such a big mayhem? What was the panic about? Why? And so many sort of messages. So I thought, since there has not been a live session recently, let me make a YouTube video and make up for the missed time. As soon as my health gets slightly better, perhaps even coming week. It's been a few days. I've been taking medicines. So I will yet again begin with those live sessions and we'll have a learning experience together. So for attending live sessions with me, you can join my Telegram channel. The link will be below this video. You can check it out. And coming back to again on Friday, what happened? How was the market? So we were in a short-term bear trend, a short-term downtrend, and in that short-term downtrend, what we realized that it has taken a sudden and a sharp move on the downside. So while the trend is being followed, there are certain continuation patterns as well as certain principles which we have previously discussed that were in play. We're going to see how they played out in charts. Also, stock specific things played out their own story altogether. Some of the stocks which were showing signs of bullishness turned around, while a lot of the others were showing sharp down moves that took the market down altogether also. As usual on the television, you saw a lot of TV analysts coming and talking about there being no fundamental reason for this fall and therefore and so on and so forth. So I'm not really much of a TV person or a business news person when it comes to watching the market. I don't watch the market tick by tick along with the TV on, and I really don't believe that one can trade without having a certain degree of expertise with price mechanism and chart. So on that note, last time if you remember when we were together on the live session, those who don't remember can check out the videos section on my channel, and you can easily see that I've been discussing certain things. So this is the chart we have been discussing on the index, right? So this is the chart. Okay, I hope all of you can see my screen, right? So this is the index chart, and the last time we were online together, I was discussing the levels from where the falls had come. Okay, so there was a holiday in between, and there was Nifty and there was Bank Nifty, right? So we saw that there was considerable movement given the fact that on day-to-day basis, we were seeing a daily downtrend. Okay. Now, as the and all these levels are there from before. So the level on Nifty, if we go back to my previous video, I've already made these levels from before, and they were very much in front of us. They were much on our face, and we could easily see on that day how this support, which was broken, has now become the resistance. So every time price comes to this area, there is a chance that a lot of selling pressure is now coming in. Now earlier this was a support zone, and these zones and points of interactions are very important. On the basis of these, just these, one can do a lot. Now I try to keep these videos simple so that people who have not learned from me, also people who are not very acquainted with technical analysis, can also understand. But if you keep a simple thought process in mind, that there are a lot of buyers protecting this area, there are a lot of buyers protecting this area, it will be difficult to penetrate this area. So once these areas are penetrated, there is going to be a sharp fall, which is very likely. Okay. Now coming to the short term, or coming to the 15-minute chart also, if we see how the Nifty has been sticking around these areas and acted as these areas have acted as resistances around 11,340 area. And once you see that the resistance was taken after a gap up, In the bull markets, markets tend to open a little weak and then go strong many times. And in the bear markets, there are times when markets open strong, they give sharp pullbacks, and then they go down thoroughly. And they go down thoroughly, and you see these kind of down moves happen sometimes, because in the bear trend, overall trend when it's down, okay, the major part of the move will take its place, and the major part of the move in terms of intraday will become even more major, right? Even in bank nifty, now these are areas, these are not of today or yesterday, these are intraday lines which I have drawn all the way back in these days when the market was trading in July. So the market was trading in July at these lows. You can see how strongly these areas must be protected. But when there is a force, there is a way the market is coming and breaking it as if this area means nothing. So this 26,290 to 340 area, 240 to 290 area, 26,240 to 290 area has been broken very sharply. And what has it been broken with? Broken with specific patterns, So I saw a lot of students were doing a lot of short selling. Some of my students traded stocks like Infibeam, and they took short trades on the basis of daily charts. Some of my students, Infibeam also was posted in my Telegram channel as a potential STBT. Also Hexaware. So the positional trade on Infibeam was great. Some students have messaged me regarding the trading Hexaware, and the other trades on the short side where a lot of students took in the last few days. And the last few days markets have been short sellers paradise. Now somebody asked me one important question: what are the key points to take away and learn from these kind of days? And that was a very pertinent question. The first key point to understand from these kind of days is that these kind of days are only tradable after some sort of market experience. So when it comes to markets which were there back, and I'm not even talking about 2008, fine, that was a special different kind of crisis. I'm talking about places like 2011, when 2011 when the markets had been going down, okay, the entire scenario where the markets were in an overall downtrend, okay, till December 2011. So the last part of the falls became very sharp, right? So I remember having seen a lot of these kind of days all the way from there, irrespective of news. We could see a lot of things. Then back in 2013, sharp corrections took place before there was a real kind of a rally which came about. So these sharp corrections and such other market phases, when you go through these phases, you live through these charts, you tend to get a knack of how the momentum can actually play out. There's a potential that the momentum can play out in a very big way. And the and if you take each ball which is coming to you and you hit for a single or you hit for a six, you don't see that. You try to play each ball. So once you start doing that, you try to identify the patterns and try to trade each one of them. You will land in places where you will see these moves coming to your favor. Now, somebody who has not been able to trade these, no worries. At least don't get lost in the volatility somewhere out of some regret aversion or anything. You need to take a learning from these. And the best way to learn is to go back in the past and see what happened on the charts. That is one of the best way to learn. Of course, I've got some stocks in radar for you. So before we go into that, let's take up two stocks which are the biggest movers, which have been the biggest movers of the day. One will be DHFL, which moved and went more than 50% down, and that was a huge down move. And it is not even funny the way it has moved down after a steep upward trend on the weekly and the daily charts. There's been a big fall. Okay. Now these things happen in the market. This is price mechanism, guys. Stronger hands are in the market, while back in 2000, you can see right now, all the way back from so many years, the stock has been giving returns which are crazy. from 5 rupees something has gone to 650 rupees and so on. So if there is a 50% cut in price, or even if there's a 10% more cut in price, it probably will not affect a lot of people who have entered the stock at the lower levels. Now, the strong hands will try to enter where they see the valuations are very, very attractive. And strong hands can also exit if the valuations are not attractive. I will not comment too much on it fundamentally, simply because one thing is to be understood over here, that these kind of news can be sometimes sudden and sometimes take their own time to build around the entire story. But yes, technically I find this bearish even now for the short term. For the short term it is bearish. Now let's look at what happened on the hourly charts on this particular day. If I take up the last 2 days, see the chart has become a little big in color. This. So if I take up the last few days, since the last 1, 2, 3, 4, 5 days, if you notice, there was not much movement on DHFL. So there was a sort of narrow range over there. And after that, when the movement had started, the momentum started on the downside. I'm not placing any of my system indicators over here, otherwise you will just get very, very impressed and say, okay, this is a big fall. You see, anything which is following a trend, when it has started to emerge, could have captured such big moves. I'm not denying that. But I'm not saying that these things happen in the market every day. Okay. So if you look at the 15-minute chart or the half-hourly chart, you got enough time to enter the trade if you followed a simple breakout principle on the charts. And if you were patient enough to hold on to it as much as you should, because after a 5-day range breakout, you should hold on to it for a few days. I mean, that's what my subjective probability says. And in some cases, obviously, it will not hold true. But after a 5-day sideways movement, you can easily afford to hold it for a few days. So one would get such a big movement. Okay, now going further, there were strong pullbacks. We can see that there was a particular hammer pattern which was made, which is showing us that the price has found some rejection on the downside. The downside movement of the prices are suddenly being rejected, and the sudden moves that within a candle the price is going down and suddenly going up show us that there's a thrust on the upside. So the thrust on the upside continued and it gave a strong pullback, after which it came down again. So this thrust was a pullback in an overall downtrend. And if we look at it from the daily point of view, daily chart point of view, all the supports in the near term have been broken, and the low of the day, which was the low of the day, is a very, very far beyond level. So the low of the day and all the supports which were broken, you can imagine how many buyers were standing at those support zones. So there has been a ferocity of selling, and very strong hands have gone out because they were able to bid the buyers lower and lower and lower. Right now, Yes Bank was a different situation, a little bit different from the DHFL situation. Yes Bank did something interesting. Now, first of all, Yes Bank has been hovering around a very key level of 321 zone. You can see that earlier this level has been important. Okay, I'm just looking at. I'm not showing you a lot of indicators. I'm not showing you anything in this simply because you have to understand the price mechanism seen on this day. Any indicator, any goddamn trend following indicator, any moving, everything would have said that this is going to make you lakhs of rupees. But you don't perceive the market like that. You have to trade the market, right? Ultimately, if you don't perceive it in a way where you are able to trade these kind of moves, then it's a problem. So that is why I'm taking only the naked chart at the moment. And yes, as I took the naked chart of Yes Bank, we saw a gap down which happened, which was already a ferocious thing, right? It is not easy to see such gap down movements, right? And after the gap down, we also saw that the price has actually made a low in the morning itself. So this low in the morning, okay, this low in the morning was something to be considered. And once this low in the morning is taken out, okay, once this low in the morning has been made, there's a pullback. Now, after there's a pullback, the market is hovering sideways and creating more distribution. So there were enough opportunities to go short on the market. There were enough opportunities to go short on the market, right? So keeping that in mind is important. Keeping that in mind is important, that these kind of situations are not something which happen overnight all the time. There was a big part of the move, this whole red candle, all of it will happen within the day. So later going back and complaining that I could not trade, it was too sudden, etc., will not work. You have to do your practice and approach the markets. And many of these very big moves show signs of proper distribution before falling and proper accumulation uh, before going up. So in case of DHFL, the 5-day range breakout happened, and I'm sure a lot of traders out there who are watching this video would have traded it also. And thank you for those wonderful messages regarding the live sessions. The live sessions happen sometimes. You can join my Telegram channel for that. One small piece of advice in all the mayhem, the place where I tend to give people a little bit of insight towards market, right? It's not that easy, because obviously there is a big movement, the market will settle down, the volatility will give us formations. Also in this volatility, because of something I say, I do not want people to get biased. So I have taken up only one stock today to discuss with you and say that there is a potential downside which I foresee in this stock, which is Allahabad Bank. We can see that there has been an overall downtrend, and in this overall downtrend, some of my wave counts have really come up very, very brilliantly. So for me, in the overall downtrend, to keep it simple for those who are new to it or probably will understand a little bit of it, since they don't have the background of technical analysis or Elliott wave theory, in overall downtrend, according to Elliott wave theory, market does corrections in 3 waves, and the movement in the direction of the trend is in 5 waves. So the correction is happening in 3 waves at the moment, right? So this 3 wave correction is over here, and therefore if I call it uh, ABC correction, it is fair enough. It is fair enough to call it a ABC correction which has happened over here. Now after this correction, what has happened is I have seen one move down and a corrective move on the upside, another move down, a corrective move on the upside. So this could be a wave 1 which is beginning, a wave 2 which has been a correction after the wave 1, a wave 1 of wave 3, a wave 1 of wave 3 this can be, and this can be a wave 2 of wave 3. And why am I using these terms like can be, because there will always be alternative counts, etc. So just for your idea, what I'm able to see over here, that we are going to see a lot of down moves happen in this particular stock. So that's it today, guys. That's it from my end. My good wishes with you. I'll be coming back live once my health is fine, and keep you all updated on my Telegram channel. And you guys can, if anybody wants to like learn from me, courses keep happening. Currently a batch is going on. There will be another batch which will come soon, and there will be an indicator batch also. So anything you feel like, you can contact me personally, and you can just be feel free to ask me anything, even if you don't want to learn from me in a particular course. And a lot of people are approaching me regarding the live sessions. They will happen more frequently, and I encourage all of you to bring more questions in also. So thank you so much. Have fun and enjoy. Take care.